Dhirendra Kumar, CEO of Value Research, is here with the answer as always. Afternoon, Dhirendra. Gold hybrid funds invest in equity, debt and gold. Over the last 1 year, these funds have performed better than balanced funds as well as asset allocation funds. What drives their performance?
Their good performance can mainly be attributed to, gold continuing to do well over the last 1 year. Fixed income proved to be fairly rewarding. With rising interest rate and low maturity in these portfolios, they were able to earn 8-9%. Even short-term funds earn that much. So that's the kind of that helped these funds. But I would imagine that a hybrid fund like this, which lacks the flexibility to be heavily into equity, is unlikely to be a great vehicle for the long run.
Dhirendra, hi. So would you recommend these funds to investors? Do they provide meaningful diversification?
These funds do provide diversification, but I don't accept the whole theory that investing in gold is more meaningful diversification than not investing in it. I think gold has caught investors' fancy simply because it did well over the past 4 or 5 years, and there's a great possibility that as and when it goes out of favor, it will go out of favor for next 10 years. And there has been occasion in the past 50 years that it has been completely out of favor and has been a very low yielding investment, if at all it was an investment, for a long period of time. So I would say that if at all you have to, you need a hybrid, go for a debt equity hybrid and approach your gold separately, so that as and when it goes out of favor, you will be at liberty and you will be able to evaluate it objectively. You can keep away from it.
Okay, Dhiren, let's take in some viewer queries. First viewer writes in from Pune. She can invest 30,000 rupees per month, needs to raise an amount of 15 lakhs in the next 2 years to buy a new house. So which funds should she invest in to achieve that target?
For anything which is 2 years, any market-linked investment is undesirable. So one should keep away from anything which has to do with equity or a balanced fund which is so heavily into equity. I would say for 2-year investment, even a 2-year bank recurring deposit could be a decent option. Today, bank recurring deposit getting initiated today will yield good return. That apart, if one is willing to take some chances, I would say the growth option of an MIP. But 15% of that will be linked to market, and this is the lowest risk strategy possible with your market-linked investment, the growth option in an MIP for 2 year in lieu of your bank recurring deposit.
Dhirendra, second query today is from Mr. A.K. Panchal. He writes in from New Delhi and wants to know what is the correct method to select a good fund. Is a balanced fund better than a diversified equity fund currently?
I would say that, ratings don't change. We at Value Research, the most popular rating of mutual fund in the country, we revise our ratings every month. But the rating methodology is such that the ratings are not very volatile. Of course, the price of mutual funds change every day, and the performance of mutual fund will look different on any given day based on if you are looking at trailing return over different time period. So returns change every day because price changes every day, but ratings change. Ratings are revised every month, but the way ratings are revised, the way rating methodology works, they change less often, and ratings do provide greater stability. But anything which is linked to market, anything which is market dependent, they tend to change. And if you are looking for greater stability, go for a balanced fund. If you are completely averse to any volatility, then maybe market-linked investment or mutual funds or even a limited exposure to equity is not for you. You are temperamentally not geared for it. Keep away.